So now we come to the next topic, which is the type of goods. So goods basically are divided into three types. The first type is existing goods, the second type is future goods, and the third type is contingent goods. Now what are existing goods, what are future goods, what are contingent goods? Let's see. Existing goods means which are in existence at the time of the contract of sale. That means these are the goods which are in existence at the time of sale. They are present, they are existing when the sale is happening. Let's say you go to purchase a cycle, you like a cycle, and you tend to buy it. So now, is that cycle existing when you are buying it? Yes, that cycle is existing when you are buying it. You go to buy a book and the shopkeeper gives you the book. So that means that book was existing at the time of sale. So such things which exist at the time of sale are called as existing goods. So goods which do not exist at the time of sale are called as future goods. They will come into existence on a future date. They do not exist at the time of sale. Goods which come into existence at a future date. They do not exist at the time of sale. They are called as future goods. They'll come into existence at a future date. Now, one good example of this is crops. Now, let's say there's a person who is a farmer, and there's this other person who is, a vendor of vegetables. Now, this person contracts with this person, the farmer. He tells him that I will pay you rupees 50,000, and what you need to do is give me all the potatoes that are harvested in your land. All the potatoes that are harvested in your land. Now, please pay attention here. He is making a sale transaction here. However, please note that the potatoes do not currently exist. They will come into existence at a future date. When the contract of sale is being made, potatoes are not ready to be sold. Possibly they are underground. Yet the farmer is selling those potatoes which will come into existence at a future date today. The farmer is selling those potatoes today. Which potatoes? That will come into existence at a future date. So I can say those potatoes do not exist at the time of sale. They'll come into existence at a future date. Thus, those potatoes will be future goods. Again, I can give you one more example. Let's say there is a manufacturer, manufacturer of shoes, and there is this person who is a wholesaler of shoes. Now he tells him that I will give you 1 lakh rupees. You'll have to give me all the shoes manufactured in your factory during the next month. So now, whatever shoes that will be manufactured in the factory of the manufacturer will have to be sold to this wholesaler. Now, tell me one thing. Are these shoes which will be produced during the next month, which will be manufactured during the next month, are they existing today? Are they existing today? No, they'll come into existence on a future date. They'll come into existence on a future date. They are not existing as on today when the sale is happening. So such goods, such shoes that will be manufactured in future will be called as future goods. Now let's come to contingent goods. What are contingent goods? Contingent goods are those goods. Contingent goods are those goods whose existence depends upon a contingency, depends upon a future uncertain event. We all know what is contingency. What do we mean by contingent? Contingent means it depends upon some future uncertain event, the outcome of which we do not know. So that might happen, possibly that might not happen. We do not know. Such a thing is called as contingency. So, what are contingent goods? Contingent goods are those goods whose existence is contingent. We do not know if they will come into existence or no. If they come into existence, the sale transaction will happen. If they do not come into existence, sale transaction will not happen. So, their coming into existence is contingent. I'll give you an example. So first I'll give you the definition. Goods whose existence is dependent on some contingent event are called as contingent goods. So if the goods come into existence, the sale transaction happens. If they do not come into existence, sale transaction doesn't happen. Now to explain this line, I'll give you an example. Now let's say this is the port of London and this is the port of Mumbai. Okay. Now there is a ship, you know, now this ship is traveling from London to Mumbai and this ship is carrying goods along with it. Now there's one person who transacts with this person. He tells him that I want to purchase the goods which are coming to the port of Mumbai from the port of London. So he tells him, I'll pay you rupees 10,000 for these goods. He tells him, I'll sell you goods. However, the condition is I can sell you the goods only when they reach the port of Mumbai safely. Now, what happens is during sea voyage, a lot of ships are hit by hurricanes, tsunamis, typhoons, and what happens is they get drowned. So these goods which are traveling in the ship are dependent upon the contingency. They might reach the port of Mumbai safely, they might not reach the port of Mumbai safely. So if they come to the port of Mumbai safely, he will be able to sell the goods to the other person. However, if the goods do not reach the port of Mumbai safely, he will not be able to sell the goods. So we can say these goods are contingent goods. If these goods will be sold or no, it depends upon a contingency, the result of which is not known today. The result will be known on a future date. The result is uncertain. So today, I do not know if the goods will reach Mumbai or no. If the goods reach Mumbai safely, they will be sold. If the ship, let's say the ship drowns in the high sea, it sinks, then obviously you cannot sell these goods. So the sale transaction is dependent upon this contingency. And the goods in such a case are called as contingent goods. So these are the three types of goods. Now let's come back to the existing goods. What are existing goods? Existing goods, I told you, are goods which exist at the time of sale. They are present there. Now existing goods again are broken into three types. The first type is specific goods. What are specific goods? Specific goods are those existing goods which have been separately identified at the time of sale. These goods have been separately identified at the time of sale. That means, let's say you go to a shop, you go there to buy biscuits. The shopkeeper gives you the biscuits you want. So what happens is the goods that you want are separated from the stock of goods. There's a whole stock which is lying with him. He separates the biscuits that you want from the stock. So these separated goods are called as specific goods. This is done at the time of sale. When goods are separately identified, they are removed from the whole of stock, they are separately identified at the time of sale, it is called as specific goods. This is pretty important. When the goods are separately identified after sale, the goods are separately identified after the transaction of sale. I'll give you an example. You go to a shop to buy biscuits. You tell him what biscuits do you want. So he tells you, you don't bother, you don't worry, you go to your home or you go to the market, wherever you want to go. I will deliver the goods to your home, deliver the goods to your place, wherever you want them. So what is he doing? He's not separately identifying the goods which are to be sold to you at the time of sale. He'll separately identify them after you are gone. That means after the transaction of sale. You're getting the difference? Goods which are separately identified at the time of sale are called specific goods because both the buyer and the seller know that those are the specific goods which are sold. Those are the specific goods which are bought. So they are called as specific goods. However, when the seller separately identifies the goods after the sale transaction, such goods are called as ascertained goods. He separates such goods, he removes such goods from the whole of stock and keeps them separately after the time of sale. This is very important. At the time of sale, specific. After the time of sale, ascertained. So what are unascertained goods? Unascertained goods are goods which are not separately identified. Specific goods are separated at the time of sale. Ascertained goods are separated after the sale. Unascertained goods are not separated. They lie with the stock. They have not yet been removed from the stock to be delivered to the buyer. They are still lying in the stock. So they are called as unascertained goods.